recap of what's going on and where the key levels are. I'm specifically going to focus on the Qs just because they're the ones getting hit the hardest. And I just really want to review some things and some key levels. As always, consider subscribing to the channel and turning on the notifications as well because this information is timely. So what we see here and what we see happening here is we came out, and we're going to just drill really down into this. We came down and we just curled that 5 and the 8 on Friday, and now we just have a gap down where they're just flushing us out. And this gap, if you really get into it, is actually the high of this is actually the low of this bar. So that's not great, and we can't make it to this 21-day. So right now you're trapped in between this 21-day and this 50-day. But there is a level of support, and let's get rid of this one real quick. And let me just show you this, because this is what happened. Just make sure I get this right. So this is the top of the gap. Okay, so this is 323.54. This is what we hit today. We went to 323.82. So really what we have going, and you can't see it that clearly, but if I move it here, you can. So what we have is just a gap fill. Now usually when you gap something or you over gap, within 11 days you fill it. So the probability is that if you don't fill it in 11 days, you're not going to. So if you count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So, it's kind of surprising that we did fill that gap. But nonetheless, we did. Now, we're in the middle of this range now. So we're still in this major uptrend. And we're just towards the low end of it. And if we draw our trend lines, we're going to see a lot of spots here. So I'm not overly concerned at all. What another telltale sign that I'll give, just not technical but just psychological, my DMs are not blowing up, my messages are not blowing up, notifications from people are not blowing up because they feel that they missed the move. So that it's usually a clear indication. And the put call ratio was just absolutely insane. So overall, from where we're at right now, we need to hold this level, 323.74. We might hold it, we might not. I really don't know. But I have been buying today. I have not been a net seller today at all. You sell on Fridays when they're rallying. You buy today. You just have to change that mindset a little bit. So, that's really where we're at. But let's just start diving into some names here and getting involved. So BA obviously had a big issue this weekend with one of its engines. But notice how where we are, right? Notice where we are with this. So you're really right in the middle. Here's your major wedge. And now you have this gap down. And you just had huge buying, and now you have you're up here. So you've just encapsulated this entire consolidation in a day on bad news. It's very similar to what we saw with Twitter, where it was not the best report, but then we just ran up and encapsulated everything anyway. This usually means that we're going to go higher. Now we have a line here that you'll see goes all the way back to June. And I think that's really where we're heading next with this. So you really have to watch the 229 line. I think that's pretty significant. I mean, there's some other stuff out here at like 350, 355, those areas. But obviously we have to get through this first. But, the fact that you're trading, you didn't even break the 21 today in this, and you are seeing some rotation into these kinds of names. And we'll get into CCL as well. Let's just stay in alphabetical order. So BTWM. I think this is acting great. So, this is our open and where we're at. But what we really need to focus on is where are we going? So here's the 1710 level, and we closed above it, and now we just open right below it, and then we can't break that level. So 1710 is a sticking point for us. 1775 we need to break out of. I mean, all I see are wedges and then higher, wedges then higher. And if you look, the wedges are shortening. So see how this wedge is here? See how long this wedge is? See how they shorten? That usually means we're getting ready for a move. They're getting tighter and tighter as far as the wedges. You're not able to hold the wedges long. So you could see a break here. I would use the 1775 personally. We have not had a close above that. You close above 1775, and you could be going to the top of this wick, which puts you at $25. So that's how I would play that. So I'll show this, and I traded this one, but I'm not a big value investor. And what's interesting about this technically is when people that buy these kinds of stocks, they value them completely different. So while they may look at charts, they're looking at price earnings, yields, free cash flow, things like that. Very different than your growth stocks. So, but they all do move on supply and demand. But this gap, if we fill this gap, we're going to 42. I mean, that's this whole meltdown. Now, I don't think we're going back to those levels, but you are in this gap. And if you go here and take a look at this, for those that want to play these, okay, this 2560 level that we broke, that's your support now. That's major support, and you're flipping it, right? And you can see here, and these are all starting to turn up. Even the 200 days becoming a hockey stick. So I do like this. I do see why people are in it. I traded it, and I really rarely stay in these kinds of names, just because of the way they act. So they move a little bit differently, but they're easy to trade when they fall in and out of favor. And this rotation that we're seeing today, you'll notice that all the high beta stuff's getting hammered, and everything else is moving up. The airlines, the cruises, and industrials, GE's beating Apple today. This usually lasts 2 to 3 days, and then the rotation comes back. So CELH, this broke down, and I'll just walk through this trade because I posted when I bought it on Twitter. So this is your wedge. Okay, when we didn't clear it again right here, that's why I trimmed. So when I start there, because you can go look at the timestamps on Twitter, and if you don't follow me on Twitter, consider it. There'll be a link in this bio or in this description to do that. But you see how we're right there. I mean, we're right on top of it. I didn't just draw these. This has been there. So that let me know, like, geez, we seem to be having a problem here. It's a good spot for me to trim it. And that's exactly what I did. But if you go to this, okay, so let's just review this real quick. See how we're at this 8 and 5, and they're just sitting there, right? They're just sitting right there. And so that is a bottom sign to me. That we could bottom there. And we just ran to the 68.70 level and sold off. So the first thing I did was, and I'm just going to walk you through this so you can understand some of the methodology, and I'm being simplistic. But first thing we did was break out and run. And then they just jammed it all the way down, right? But they didn't break it down, did they? So when we got to this level, and I'm going to draw into a shorter term chart, but when I got to this level, this was my risk. Right, so from here you have a dollar risk. Well, I have 8 points, 7 points, we'll call it, by the time I get the bad fill and everything else. So you have 7 points. So I have 7 to 1 if I can find a trigger around here. So I drilled down into a 1 minute chart, and here you are. You rally down. You rally down. Look how this 1 minute, and I know it's just a 1 minute chart, and people say don't use them. But I do use them. Now, look at this 1 minute bar at the bottom of this waterfall, right? After we had one waterfall, second waterfall, which is important to note, and we go to the bottom, and then this one little 1 minute bar opens like that and closes like that. And I've referred to these before. This is the most bullish bar that you can possibly get. You open at the low, and you close at the high. As soon as we had that one tick above it, this triggered a buy for me. And then I knew that my stop could just be here. So now my stop's even tighter than that dollar. Now I'm up here, it's $1.6150, and I think it can go to 68 by the end of the day. But I'm hitting that resistance point. So when I got to that resistance point and rejected, I trim what I think is an appropriate amount for me to trim. In this case, I really want to be in this name. I think it's a beast. So I think I trimmed 20-25% of the position. I'll leave it on, but now my stop is my cost. So now my stop's moved up, so now I can't lose money. No matter what happens on this trade, I will make money, unless it gaps down on me on news, halted in news, but you always have gap risk and news risk. So that's that trade completely walked through, so you can understand it. I like this. I'm concerned that we're not breaking this wedge, but it's a weak day today. It's a crappy day. FSR, you can see here, you have your little wedge. Look how they gapped us below this resistance line, flushed out the rest of the people, but this is really important on FSR. Look how we're holding these levels, and look at this curl. So this has room, and this could keep moving. I think that this can get back to that 20, what is this, 21.5 level, and this is from before, right? Yeah, this is all the way back here, 2160. So I think we can get to that level fairly easy, 2160, and if we get above there, this thing can run. And you just think about this. You have a huge base. That's all this is a base. GME, I'm just going to avoid. It's interesting. It's definitely getting action again, but there's so much overhang right now. So, I can run through it real quick, but, there's just so much overhang on this from where people are in that it's going to be really hard for this thing to get moving. But if I was going to trade this, I'd be doing it on 15-minute charts, half-hour charts, hour charts. And you can see your little wedge here and then how you break, right? And so then you use your stop, and you're respecting these moving averages. So, this is how I would trade it. But it's really very difficult because when you have that much overhang, that's what happened to Telray. When we got that much overhang, it becomes very difficult to stay in these things because there's so many people that just want to get the heck out and move on with their lives. Let's do grow. So I like this. I like this a lot. There's some really, you're in a huge channel here. It's up today and it's respecting it. And we're setting, here's our little flagpole after this wedge break, right? And we're just sitting right in here consolidating. And we can't even break the 5-day on a bad day. So this is telling you something. And it's definitely one that I would watch. And we can go take a look at a week chart on this because we should have enough data, right? And let's just go through all the way to here. Go back. Well, let's go back even further. So, okay. So this is just monthly. Let's just review this on a monthly basis. And I know the month's not over, but this 7.5 level is huge, right? And this is the first time we're above. This is grow, G-R-O-W. And this is the first time that we're not above that. So, clearing this level sets us up for this, right? A higher high, reverse shoulder, right shoulder failure, that would set us up for this level. And I have been asked about how I come up with price targets. I'm going to do a small video eventually on it, so make sure you have your notifications on. So I can walk you through at least 3 processes on how to develop price targets. Price targets are estimates. I say this a lot, and I'll say it again. They're estimates. No one has any idea where something's really going. We can denote probabilities based upon past performance, but we really have no idea. But they do help you determine your risk and reward. So you can see how 1045 and 1435 are key levels. But you break this, we can keep going. So I do like this, and this is grow, G-R-O-W. So this is one I mentioned. It just had enormous volume on Friday, just enormous. So I don't know what the SPAC is going to be. I don't know what they're going to put into this. I really have no idea. But I will say this. This is, we're not really falling apart here. We're just testing this one support line. And right now we're below it, but the day's not over. So I would watch this. This was a huge move on Friday with enormous volume. This usually does not go away. If I broke the low of this bar, I would be concerned. Other than that, I don't see any sense in doing anything with it. Myrna. So MRNA. Very clearly 1, 2 double top. We're rolling here the 5 and the 8-day cross. Remember that video that we did where we show this pattern? And it's in indicators. If you haven't seen it, take a look at it. But also, look here, and now we're below the 21-day. This is rolling. So really what we need to do is we need to accept that, 146.09 could be in play. So, that's something to really consider. Hold on, this thing's giving me a little bit of an alert here. Let me just see what's going on here. Oh, my darn computers. All right. So, we're seeing the 146 level. That can come into play. And we have broken this channel, right? So now we're in a rising channel, or we're in a falling channel. And I would watch this. I mean, if you look at this candidly, this is trading exactly like the Qs if you put a chart up next to it, right? I mean, if you look at the Qs next to this, I mean, it's like looking in the mirror, right? I mean, they're almost identical. So, I mean, it kind of tells you why it's rolling. It's rolling because it's high beta, not probably because anything's really wrong with the fundamentals. So when high beta comes back into effect, this probably will go as well. And I would use a wedge break and above the 5 and the 8 before I would add to it, because I have some real serious support or resistance issues up here now. This is very serious. It's going to be hard to get through this, but when I do, it could resume. And there's a couple key levels here. But realize that the 50-day is not unrealistic. It's done it before going higher, and that could be all it's doing, right? Just a little wave. So just consider that. Planter, I came very close to putting in the newsletter today, and then I backed away. I backed away because of the action. But let's just go through this, and I'm going to give you the trigger on why I didn't post this on the newsletter. And if you don't get the newsletter, please consider getting it. It's free. It's in the descriptions. But see how you have this island gap here and here, making this an island, right? That was a key trigger, and this was on the Kathy Wood news of her buying 5 million shares. We ran up, ran into the 50-day. Now we're opening at the 8, and then we're between the 8 and the 5, right? But they're starting to turn up. So I do like this. What I didn't like is I didn't like the reaction this morning. And let's just view this so you can understand what I'm looking at. So here's the day, and here's this nasty red bar, right? And this was the 15-minute bar. And what did they do to us? They jammed us up over, and we talk about this, they jammed us up over a support line, right? Over resistance, making us think they're going to flip it, jam it down. And then we can't get above it. But you could see this playing out very clearly in a 5-minute, right? So once you saw this, and that's what I'm saying, it's very important to use different time frames. Once I saw this reverse from here to here, that's why it's not in the newsletter. So even though I don't think it would have triggered here. Yeah, it might have. No, I said 325, so no. But what was the high? 319. So, or 3019. So once we triggered here, I just avoided it and said, okay, I'll watch the next half hour, 45 minutes. And if we do trigger this, then it's time to step in. And you can see what happened. I didn't just draw these lines. These lines have been there. So, but it's interesting how we just hit exactly what we're talking about twice, reject, form that dreaded H, and then break down. So do I think this moves over? No. Do I think it'll present an opportunity for us to buy? Yes, I do. It's just not right now. So this market has to sort itself out a little bit. We can see that across the board today. But this is when you want to start having your list of stocks that you want to own, not when they start running again. You want to be ahead of everybody else. So this TDAC, I don't know why it's not letting me move this. There we go. So this hit all types of scans that I have today. And, it's not really doing anything great. We opened here and we're down here. And it's just weak on the day, and I know it's a SPAC. But there's some really key things that are going on here that I really liked. So you can see right here, right? We have a lot of room to run just off this wedge. It's really hard to use this other one, but you can see, hold on 1 second. Even if you use this little wedge here, right, you can kind of see that. So I like this. I like this break. I like what's going on here. So I would expect this to continue. It just might not continue today. So apparently it's a SPAC. They're putting lottery.com in here. I don't trade on fundamentals, but the growth of that is just sick. So you're going to get your growth buyers that are going to step in, and they're usually Momo people. So that's it in a nutshell. If you like the video, please do me a favor and click like. It takes you 2 seconds, but I'm really trying to educate people on what it takes to be a consistently profitable trader. And I'll talk to everybody in Twitter or here on YouTube, and let's just keep rocking and rolling and making it a great week.